Hello, everyone. The outlook with what we just received, the non-farm payrolls report, is getting a little bit more clear. The signal, which is it always does if you are able to see this, beautifully picked up on the fact that the non-farm is at least not going to be negative, for meaning it's not going to be catastrophic. And as we said, the if labor market do not loosen from here substantially, signaling imminent recession, meaning catastrophically loosening in the labor market, then are we sticking to our base case scenario that the next leg down in risk assets, if it indeed comes, is going to come on the back of rates rising, meaning long end bonds falling. And we shall see how it's going to translate and to what extent it's going to translate into the fall in risk assets, how far they will allow the rates to rise. At this point, at least in the short term, we've received this. The window opened, and we are able to see just a little bit past the next 1, 2, 3, 4 weeks ahead. And the only thing that could have really substantially moved the needle in rates is unemployment report, horrendous unemployment report, and it didn't. Therefore, Federal Reserve is not going to cut rates. Definitely, well, we know that they're not going to cut in May, and it's a question whether they're going to cut in June. But we shall see. We know, and fun fact is, if they cut in June, it is still negative for bonds. So you want to be short the long end, regardless of the scenario. Not cutting rates is negative for bonds, as we are seeing currently. It is, look at this, it is negative for long bonds. And cutting rates on a lag, not so far of a lag, month and a half, 2 months, will be proven to be negative for bonds even more if they hadn't cut rates. So, yeah, that's the idea. So let's walk through this. First of all, the signal that we received, what was it? It was the break in the trading momentum, trade flow in the dollar, coupled with clear break, because it's the similar set in gold price. Both of these things signalize, what does it say? It says that in the next 7 to 14 days, it is we're likely to see more relative strength in the dollar and relative weakness in gold price. Mind you, it's all happening within the negative tail for the Dixie and a negative trend for the Dixie. It signalizes, it just says and speaks for a more deeper retracement, as we've seen right here. Same thing is going to happen here. Most likely more protracted in time rather than price. So it's not going to be a massive retracement into 102, 103. It's going to be more protracted in time. More time will pass, month and a half. Ultimately, we believe the Dixie will create a trending lower high within these boundaries and continue on its path down to 95. With gold, it's completely opposite. More time shall pass in here, high low, continue on the path to beyond 4,000. It will take time. It will take plenty of time. It can take months. But once again, the next big thing and the next thing to focus your attention on is gonna be happening in late July, beginning August, September, October. Is this refinancing need, which will arouse from the Treasury, which will substantially push rates higher, plus inflation, once again, as we are seeing currently. With stocks rising as they are, with unemployment, as we've just seen, not reacting to a massive fall in prices, not reacting to a massive deterioration in financial conditions. No recession. Inflation sticky, reaccelerating slightly in Q3, and it's all the cocktail you need for higher rates. Slight reacceleration in inflation, very slight. It should be just very slight, and a massive issuance from the Treasury, and we shall see a 30-year rise beyond 5.5. That's the basic idea here. So yeah, the non-farms came out. Great numbers here, great numbers here. Generally, everything is dandy and fine. Speaks once again for higher risk assets in a short term, in a very short term, higher risk assets, higher dollar, protracted consolidation in time. Therefore, once again, everything that's denominated in dollars is going to go lower. Reprieve in oil price, but still oil is signaling squarely into the negative trend territory, as pointing to the creation of a trading lower high within this boundary and continue down to 55, down to this level in the near term. A lower gold price, which is very nice, is exactly how we thought it would play out. We are thinking about selling puts. The lower it comes, the better you can sell the puts on it. Going to 275 preferably, and selling puts on it. When we reach, let's say, the 290, we probably will sell puts on gold. In terms of the bond pricing, once again, massive retracement. Still, mind you, still lower high on a trading basis. Still 2-year in a negative trend flow and a negative trade flow. But it's going to be a pretty monstrous consolidation in here, and we shall see if we break this high without reprinting and creating a lower high with the below, as we've seen right here. It didn't go below this low. This will shift it into the positive trend. It means that the market will not be pricing in any cuts in June, July, and August and September. We will not see any cuts. It's questionable whether this is the case, whether this is going to be the case. And generally, as I see it from the macro perspective, if Jay Powell is sticking to his path, that he is afraid of inflation expectations becoming entrenched, he is afraid of this outflow that we've seen in the dollar, the capital outflow from the US, and he remained hawkish, rightly so, very well played on his side. He might have no reason to cut in July as well, and because he is adopting this approach of wait and see, and we shall see. Generally, so far, once again, negative trend, negative trade, until we break this level. Only then we can judge whether this is going to be a momentous shift or it's not going to be a momentous shift. What this speaks more for, once again, is this. This is the name of the game, not this. This is just instrumental. But this is still negative trend and negative trade. This, on the other hand, is positive trend, positive tail, and as of now, negative trade. And let's see how we play in here. This jobs report plays very nicely for our short-term and medium-term understanding what will happen with bonds. But once again, we've said what will happen with bonds is after break into positive trend, we will consolidate for a while. Consolidation in here. Move lower, meant to be faded. Move higher, meant to be faded. And ultimately, at some point during July, we will start to move out from here. Start to move out in 5.1, 5, 6%, depending on how far they will let it go. But this is a great news for us. We've added to the short, not yesterday, we added to the day before yesterday, if I'm not mistaken. We added to the short on TLT. And we're sitting here and waiting. It is bar, once again, massive deterioration in unemployment, massive recessionary conditions. The current environment is positive for risk assets. And at some point, but it will happen beyond the next 2-3 months, this rise in yields will start weigh heavily on risk assets. But it's not now. It is nowhere near. We're nowhere near this place. So this is it. Prepare, accumulate, and short TLT. Because the move higher is coming. And once again, as we've said, we are in this environment. We are somewhere in here. We are just waiting. We're going to stay. We're going to do something like this for the next month and a half, 2 months. And ultimately, we will get this move. Once again, how far this impulse will last depends entirely on what the Scott Bessent is going to do and what the Fed is going to do and how they will react to this, whether they will react proactively or they will wait until the rates rise, cause problems, and only then react. The other thing that pointed to the better than expected jobs report and generally better than expected conditions is once again the credit itself. When HYG bouncing this strongly and leading the market, leading stocks, leading indices, leading even separate strongest US names within a certain sectors, that speaks a lot to the fact that once again this is a very protracted and serious retracement within this negative trend, as we've said it multiple times. So positive trade on HYG, still a buy signal. Let's move, let's see how far, let's see what we do from here. And US 500, let's keep moving. Let's keep moving. As we've said, our target in here ultimately is 580. This high is the trending high, 580, 590, and that's it. It can be, by the way, we can, what can happen, by the way, the other situation is either, there are two options. Either we take this high out and we do a very conventional run on trend, as we've seen right here. This is your run on trend, massive move into the trend, sell, and a massive move lower. Or we can ultimately break trend, as here, break trend. We can even, this impulse can last into 600s, let's say. Massive impulse, we break, ultimately we break this trend level, and from here, if we run it, yes, we will revisit 510, 480. If we break it and go into 600, let's say, ultimately from here we will still think that we will revisit 540 and 530. But it will be a move higher, move lower, and then move higher from here. And we will not revisit even this low, or especially the 480. But as we said, once again, short-term, long equities, we've said many multiple times, going to 580, continuously going. Let's see where this takes us. So far, it's long in all indices, all indices, and we shall see how we're gonna. The next important point is whether we break trend in most important US indices. We broke trend in Microsoft, and once again, I do think that this was the ultimate low for Microsoft. We're never going to see it at 350. Well, not never, but in this cycle, this is it. This was the low for Microsoft. We broke trend in Tesla, which is this flaming piece of shit. Even it broke trend, so it's positive trend. Netflix positive trend, PLTR positive trend, Google positive trend. Apple is not positive trend. Meta is not a positive trend. Amazon right now is not positive trend. But a lot of major names are positive trend. Big names as well as BRKA positive trend. JP Morgan is neutral trend. Walmart, Costco positive trend. A lot of things are. So this is not the short, like massively short markets. No, this is not. We don't see much negativity. There is a lot of good breath underneath all of this from the perspective of our signal. So it's not the time to be... so short US indices and US stocks is not the play. It's not the main play. The main play will come later in the form of, once again, short TLT, short rates. This is the next big move, the next big play that will define everything else. If this is the case, we've outlined two cases for SPY. For Bitcoin, it's the same thing. Any dip, we are praying for this dip to come, and we believe it will come to some degree. We shall see how protracted and how deep it's going to be, but it will come, and you should be buying seriously, buying and loading into this, especially in Bitcoin. I believe Bitcoin at some point, whether we stop at 100,000, whether we stop at 110, should retrace down into 90, close this gap, and ultimately give at least some opportunity to scale back into this. It would be pretty preferable, please, if he allows us. We need to. We have only 1/3 of the position that we want. That's pretty fun. So that's it. Yeah, in terms of the short-term trades in equities and indices, there is nothing to be had in long Dixie at this point, and potentially looking at selling puts on GLD, but going into the Fed meeting or after the Fed meeting, accumulating position, short position in these names. The signal is beautiful here, absolutely marvelous. Accumulating and into this short position. US 500, we've talked about this. Generally, once again, the European indices, especially denominated in dollars, perform better than anything else. If you want to play the next little up leg in US indices, you want to be doing this through these names, not through the US indices itself, but any other international names, even China. FXI is looking better than SPY, and generally that's it. I guess not much else to say from here. I've given general outlook. If what I would be doing is I would be still buying any dip on a trading basis in US 500. It didn't give you my choice, honestly, right? Especially on this day when we have negative, as we've been saying here, buy any dip you should buy, and that's all you got. And then we continuously moving higher. From here, we shall likely get a reaction from 570. Consolidate in time. Maybe next week is going to be, most likely next week is going to be just a consolidationary week. Even going through the Fed meeting consolidationary, and ultimately during July we shall take this 580, maybe 600. So that's what you want to do here. You want to be preparing a massive short for TLT, and generally selling, by the way, selling vol on TLT as well. You want to be short puts on gold from the trend. We're not going to go beyond the trend. We're not going to go massive. We're not going to get a massive move higher in Dixie from here. It's just a, if I may find something from the previous moves like this. We may get, by the way, we may get very well. We may get something like this, like 3 months throughout summer, like nothingness, just absolute nothingness from here. We can get something like this. And once again, but that's the best that we can get for the dollar. It means gold is going to do nothing. It means what gold did that time, it just stood multiple months in one place, literally in one place. Look at this beautiful level, and then we broke, and then this is what we expecting to see here. Literally, this is what we expecting to see here. And yeah, that's the general idea. And that's it. And once again, if you want to play anything on the long side, Bitcoin is the way to do this, especially MSTR is the way to do this as well. Waiting for a confirmation, waiting for a retracement, especially we are waiting for a break in trade in Bitcoin. First, any test in trade, and the trade currently is right here, any break in trade, we will be gobbling that up. We will be buying with all our might and all our money. This thing, we will be buying into this. Yeah, so that's the general idea. How do I